All right, so we are back. We're starting class. This is now being recorded. So hopefully everybody has their popcorn. We'll get straight to what it is that we're lacking when it comes to the VWAP. Gotta have the VWAP, man. Gotta have the VWAP on the charts. Let's close this. All right, so let's talk about the VWAP. What is the VWAP? VWAP stands for volume weighted average price. Can't get around it. It is the market. This specific chart is algorithm based to price. So price action is all that matters. And that's why we look at the VWAP. So as you can notice here, we got the blue line. That's the VWAP. Then we have the dotted orange line. That's the multi-day VWAP. So the multi-day consists of prior day's VWAP mixed with today's VWAP. And why is VWAP important? Well, VWAP is important because it is the tool that institutions use to smooth out their order flow. So I always get concerned when I find out people are trading without the VWAP. As you can see, I don't have any moving averages. I don't have any exponential moving averages. Only thing I have that come tailored, because this is a custom indicator, is the standard deviation bands. And price action tends to react to these bands, as you can see here. So they're important for me. I don't necessarily need to use anything else. I don't really need to use Bollinger Bands, moving averages. Sometimes I use the Ichimoku Cloud um, as moving averages. But for the most part, I don't need them. And that has taken my trading to a whole nother stratosphere. So let's just go over a couple of the strategies that we utilize when it comes to the multi-day, 1 minute multi-day VWAP reversals. All right. So a lot of people have trouble when should I get in? When should I get out? So your exit point is just as important as your entry point. So you need to know when you'll be getting out. And the thing about multi-day VWAP is that it gives us the indication of when we should be getting in and when we should be getting out. All right, let's take a look at Starbucks. So if we're on a 1 minute, 1 day chart, as you can see, we have a lot of chop here. But if we're looking at blue line to orange line, which is our strategy, 1 minute multi-day VWAP reversals, then we're knowing as soon as we get a break from the blue line to the orange line, that's where the money is made. So this is a lot of chop at the beginning, which when I say chop, just means that we're going sideways. So since we're going sideways, it'd be super hard to make any type of income, locate any profit in this mess. It's messy, it's ugly. You're probably losing a lot of money here. So you got breaks here, quick break, and you got a dump, you got another break. So we would call this the fake out, shake out, breakout to the multi-day VWAP. So what happens when we get a huge candle like this green bar here, breaking over the VWAP? Of course, we're looking for multi-day VWAP. So when are we getting in? And we break this huge, well, if I'm looking at all this chop, of course, I'm looking to break this point here. I got to break that high of the day. I'm not even going to attempt to get in here with all this mess unless I'm breaking the high of the day. So if we go to the 5 minute chart, if we go to the 5 minute, take some of that chop out and get some clean definition to our bars now. We got one, we got two, we got one. Boom. This bar breaks over the high of the day very strong, super bullish. So we want to capture that move. We want to capture that move. And we don't want to sell our entire position at one price, because later into the day, we get a move even higher. All right. So if we sold everything at one price, we would have been at the end of the day, man, I should have been holding that call. I should have never sold it too early. Well, you did. So now you need to think about taking profits and not selling everything entirely at once. So you can always hold the runner. You can hold the runner at least one contract. Take most of it off the table and hold one. You never know how high it might go. All right? Never know how high it might go. So let's take out a look at some more. Let's see what else is doing pretty well today. Let's look at GDX because I've been a fan of gold for the last couple weeks. And I like the 5 minute bar because we could get a lot of clarity. A lot of clarity. So as you see, there's no multi-day here. Where's the multi-day? It's way down here, so we can't utilize that. But we can utilize the blue line. That's all we need to really utilize. So here, boom, you got chopped up. Same thing as Starbucks. But you got a clean break. You got to break above the point where it was breaking down from. And I wouldn't even consider this the high of the day because we didn't even close here. So this is just like a phantom a wick. You know, it just got to that point, but it didn't close there. So that's irrelevant to me. All that does is signify price action. So we get a big green candle breaking over the VWAP and we get a move up. As you can see, it slides upon the standard deviation band. We get a dump, we get a move down. And then we get a slight chop. Get a slight chop. And we get another break. As you can see, we dump, can't break down where it broke out from. Touches that point, consolidates a little bit under the VWAP, and you start to lift off. Of course, we're anticipating the VWAP break. VWAP break, you're in, selling some here. All right, not selling your entire position at one price. Then, of course, hopefully you sold some up here. It's the end of the day. No point in holding it overnight unless you're just feeling super bullish on GDX, right? Exactly. So let's take a look at SPY because we have monster moves in SPY today. I know a lot of people like to trade SPY. Pretty much same price action all the way around the board. You had your pump, you had your dump, you had your VWAP break at the beginning where you got paid. You got your drop below the VWAP. As you can see, we've retested these levels here. Can't break down. So if it doesn't want to die, then it must be a buy. We get a huge candle. I remember this announcement. We jiggle around the VWAP. Break this level right here. Break the high of the day. Can't break down here. So this is all these patterns are telling a story. It's telling us a story. So we got to keep in mind the high of the day. We got to keep in mind the low of the day. I'm not going to consider this a low of the day because we didn't close. So we couldn't break this 396.47 to the downside. So that's offering support until we get to the end of the day where it was clearly defined that we are going back to VWAP because we can either break below VWAP and retrace back to it, or we could break above it and retrace back to it, the downside. So here, huge candle breaks this level. So that's ultimately what I was waiting for. I would have been waiting for. I actually started shorting it here. Started shorting it here. I bought the 396 puts, 73% profit just from here to here. All right. But just imagine if I would have caught it up here, if I was even paying attention then. You got a big, huge red dump breaking the support level where it broke out from. That's why this is important, because it broke out from this level that it couldn't get over in the first place, held this level of support, and broke up from there. So now we're breaking below that. We're breaking below VWAP. We retest VWAP here, can't get over. So of course, stay short. You get here, this level of support, breaks below, big red candle, stay short. Easy. Easy, easy, easy peasy. Okay? And that's what you want to look for. At all times, that's what you want to look for. So if you would have caught that move, just that move right there at the end of the day, 3 o'clock, around 3 o'clock, that was a 73% move. Anywhere in there, you were able to take a profit. So the most important part of the day for me is at the open and the end of the day. Unless you have the time allotted that you want to sit, and you're able to actually watch the chart all day. I know a lot of people don't have the time to sit back and watch the charts all day. So all your money can be made in the first hour or the last hour. So it was a bullish beginning and a bearish ending. So just keep in mind significant levels, breaking above significant levels, finding support takes you higher. All right. Break down back to VWAP, big red candle, breaking this level, breaking VWAP, VWAP retest, can't get back over, stay short. Stay short. So this will be a target. All right. Breaks that level, continue staying short. All right. Let's see. Let's see. Can you guys hear me? Any questions? Type them in the chat. Any charts you want to go over, type them in the chat. We'll take a look at them. We'll see if we can set something up for tomorrow. Guys are interested in anything. You feeling bullish or you feeling bearish? Or any stock tickers? Type them in the chat. And we could go over them and see what you're looking at. Kind of roadmap. You always want to look into the pre-market as well. If you have the time allotted, you also want to look into the road mapping in the pre-market. Pre-market is super significant, super important. So, and that's where you get your levels from. So if you don't have these custom indicators on your chart, then you can line them up yourself. You know, you want to take advantage of what's the highs in the pre-market or the aftermarket. What's the lows? You want to kind of map out these ranges. You want to know where are levels of significance. Where did it break down from? Where did it break out from? VWAP break. All right, so these levels become significant. Let's take a look at who reported earnings today. Let's take a look at AMD. Pretty much same chart. Market kind of moved the same way today. What was kind of interesting today? I watched a lot of Apple. Apple did its own thing. All right, Apple. So as you can see, it was a lot of choppiness. Right? So when was the best time to get in? What was the best time to get out? A lot of beginners probably would have got ate up. So if we look, let's go to the 1 minute. 1 minute, 1 day. And we notice the opening had a lot of chop. Can't make money here. But you can make money realizing, and this probably changed because this orange line tends to change every day. The market's closed now, so it's kind of just doing its own thing. But VWAP break here. So that's why we mapped out. If you would have been watching Apple from the beginning, you know, we got a bullish signal on Apple. So we were looking to be long Apple anyway. The 7 stocks that we look at every morning to break the 5-minute bar. Every morning there's 5 stocks that we watch. And that's Apple, Microsoft, Netflix, Baba, Tesla, Amazon. We always look for that to be either bearish or bullish after the first 5 minutes of the day. So we got a bullish signal on Apple as it's breaking the VWAP to the downside. So why are we getting that signal? Well, we use something called the Ichimoku cloud. It's not here right now. So if I were to put it on here, it'd probably be somewhere down here. But if we're just utilizing the VWAP on this Apple chart, we got a break to the downside on Apple here. All right, we got a retest here. So that's just a retest of telling us to stay short. We can't break back above VWAP, right? So if we would have got short here, or even if we waited to see if we could get a retest, staying patient, and then we get that breakdown, it's a good time to stay short. But now we have these levels of interest here. We can't really break too far down. And you can see the standard deviation band kind of holding it up. So now we lift off. But the biggest move came because all it did was chop below the VWAP, which to me is a bullish sign. It means it's a lot of consolidation below the VWAP. It's not really breaking down. It's just consolidating, going sideways underneath the VWAP. So to me, I'm looking for a break. The first break above VWAP, clean break. And you can notice it broke here and consolidated on the upside of the VWAP. So it consolidated on the downside and it consolidated a little bit above. All right, so that just means there's a lot of orders that's being filled. It's a lot of orders being filled, and they can't really decide where this price should be. So now we know we have more buyers than sellers because now we're consolidating above the VWAP. VWAP lets us know what side of the trade to be on. So if we got in on this break right here and stayed in one contract that we were comfortable letting go to zero, got you a move right all the way back to 150. So 148 got you a $2 move in Apple. Let's take some of that chop out. Let's go to the 5-minute bar. For 5 minutes, keeping the chop out. It's not looking so crazy. And now we can see clear as day a very bullish candle bouncing off of the support level, breaking VWAP, consolidating above VWAP, breaking above, consolidating again, breaking highs of the day. And now we look for this level right here as a target. And you had a chance to play it to the downside once we see, based on ATR, which is the average true range, that Apple probably won't go as high as the ATR of the day. You reach the low of 147, got to move to 150, and we start to retrace back to the VWAP. All right, so this is how you utilize VWAP in every situation. Every situation. You just want to be able to understand what are these, because candlesticks are just representation of price action. You know, they're just showing you what's going on. So when you see consolidation like this, there's a battle. There's a battle of orders going in. It's a lot of orders. It's a lot of volume at this price. So if we pull out the volume profile, say we pull out the volume profile, and now we can see where majority of the volume is. And all this is telling you where the buying and selling is going on. Where's the most buying and selling? So here we have a lot of buying and selling in this zone. We have a kind of a thin zone, which would be a level of support. And then we have point of control up here. And then we have the end of the volume profile. So if we were looking at the volume profile, we will also know that this could be a level of resistance. But since we had that red line up top, we automatically had that indicator on without us even having to pull up the volume profile. So now we had a break below point of resistance. So that's a point of resistance breakout to the downside, right? You can see that big red candle leaving the point of control. Everybody's going with it. We get through this thin zone, kind of capture a move back into this price action. All right. So that's how we utilize volume profile, VWAP, and what else? Let's look at something else. If you guys got any questions, type them in the chat. If you have a microphone, you can utilize your microphone feature. If you got any questions, any charts you want to go over, let me know. Feeling bullish, you're feeling bearish on any tickers. Let's take a look at it. All right. So let's see what else we got. Uh-oh. Here's the Ichimoku cloud. Ichimoku cloud, one of my favorite indicators. All right. So the Ichimoku cloud is just a several different moving averages. It's a combination of different moving averages. So like you have this line, you have the line that you kind of see it, but it's a gray line. Then you have the orange line. So these are both combinations of different moving averages, and in the middle is a combination of moving averages. So it just pulls that data aggregation to kind of let you know that if you're above the Ichimoku cloud, you're in an uptrend. If you're below it, you're in a downtrend. And if you're in the middle of it, then you're in a neutral state. All right. So you can kind of identify a trend of, say, if you just wanted to play the Ichimoku cloud breaks, which some people do, once it got above the Ichimoku cloud here, then it starts its uptrend, right? It starts its uptrend, and based on the ATR, we have targets. We got levels that we want to pay attention to keep us safe. All right. And this is Google. Looking at Google now. All right. Let's pull up VWAP. Let's talk about VWAP though. Let's talk about VWAP. All right. Let's take a second to look at the signals. Let's look at the signals for today. So we had a lot of bullish signals, of course, that came out on the scanner today. Scanners are always giving us bullish signals. They're usually always calls. And this one stands out the most. BBBY, 1125, 3.5 calls, limit 53 cents, in the money, very nice dimensions. So when we say nice dimensions, we're usually referring to the price of the stock, the price of the option, the market maker expected move, delta, and the beta. So all those go, as you can see, the formula that's in the chat. There's a formula that we use: current stock price plus the market maker expected move minus the option strike plus the option entry price. Delta should be at least 1/3 of entry price for the option. So this formula will help you actually identify if you're overpaying for an option, if you're getting an option for a good price, and how much of a percentage move you are subject to get based on the market maker expected move. All right. So when we say nice dimensions, that means that we have based everything off of this formula, that there's a good chance that we'll be able to profit from this particular option. So all options are not they're not made the same. You know, you can't overpay for options. You can't put an option play on and be negative and not really know why, or you can lose a lot of value really quickly. So want to make sure that you're getting the right and best dimensions when you purchase option contracts. All right, but let's look at BBBY. What is that? Bed Bath and Beyond. Bed Bath and Beyond. We're looking at the 3.5 calls, so we're already in the money. All right, we're already in the money. Let's look at a longer time frame and see what we see. So it's a 1 hour, 20-day. All right. So based on the average true range, it looks like we have a small pullback. So this is a range. Notice how it's kind of staying around this price action here, in this little range here. So now it breaks down, recovers, sell off. So now this would be an opportunity where it's holding support here. It's not breaking down from there. Hasn't broken down. So it's bouncing. So where's the range we need to get back to? Somewhere up here. It looks like it wants to get back to this price action. So this particular call is already in the money. We got good dimensions on it. So it's a good chance that we'll probably make more money on this one. So if we go back to the longer time frame, it's obviously on the slow decline, just grinding down, finds a little bottom here and breaks down. So now we're expecting a bounce. So all we need is a small move in the direction that we're looking for to see a nice profit on such a cheap stock. All right, so we're in at 53 cents. First profit target, 65 cents. Second profit target, 75 cents. So you're able to pay $53 for one contract. Okay. $53 for one contract. I don't personally like expensive options. So these are affordable and you don't have to spend an arm and a leg. Especially for beginners, it's good to start small. So you want to be able to get these good options that you can either paper trade, get familiar with the strategy, see if it works, get better with taking profits, get better with just executing trades. You don't want to put a lot of size on just starting off, because what that does is a recipe for disaster. If you don't necessarily know what you're doing, you'll be overpaying for things. You'll be, you don't want to put your half of your portfolio size on any one trade. You want to keep your losses moderate, keep your account healthy. As long as you can keep your account healthy while you learn, you focus on making better trades, winning more trades. As you get comfortable, then you can start to increase your size because you're refining your strategy. You're more confident with your entries, your exits. So what this does is it introduces you to actually getting familiar with buying at certain limit prices, taking profits, and not going crazy. You don't want to go crazy too early. You really don't want to go live until you're ready, because we've all been there where we lost a lot of money, and it's never good to lose money, especially a lot of money, and then you get into a psychological state where you feel like you have to always win your money back. And once you get into that psychological state, it's going to be hard for you to advance and actually focus on winning trades, because you're going to always be chasing the money that you lost. So if you ever find yourself in that situation, chalk the losses, cut them, reset, take about a couple days to sit back, watch the market, don't trade, just sit back, paper trade. Don't put any real money on until you clearly have entered a new mind frame, because it's daunting losing that much money. It really messes with your confidence. Outside of the charts, it messes with your home life, it messes with your personal relationships. So you want to keep your mental healthy as much as possible when you're trading. So that's why it's not good to put that much size on trades, because you don't want to be losing money fast. You don't want to be doing that, because it's ultimately gonna affect your mental health. There's a lot of stressors in this. Watching money fluctuate, red and green, negative, pluses. Making good money and you losing money. So you got a bad stressor and you got good stressors. So your emotions are up and down all the time. So the best way to keep those emotions in check is to not put too much size on a trade. I know we all want to hit the home runs every day, but I promise you, if you slow down and you really figure out how to trade the right way and really leverage options in the best way possible, then it will be life changing. But if you destroy confidence, or you get in a situation where you have to give up before the money starts coming in, or you just throw in the towel before the money starts rolling in, then you never get there. So main thing I want to focus, or the main thing I do focus on, is just helping people keep their account healthy, man. Just keep it safe, manage it in the best way possible. It's not too hard to pick up $20 bills all day. Um, Super easy. So let's look at another signal. Let's look at one that I really liked today, which was GEO. GEO was a nice scalp. It's actually 50% profit. One of the better signals today. Had a big move on GEO. GEO went from 834, 830 to 9. It's a nice move, dollar move. So average true range, 45 cents. Subtract SDTR, kind of give us a wiggle room. So we had a huge expected move. VWAP break here, big candle, break multi-day, break this, break this. So that was a nice move. Let's look at us. Let's back up a little bit. Wow. So yeah, that was a nice signal. Let's see. So we got in 11.18, $9 calls. Let's look it up. 11.18, $9 calls. So this is how we track the options, right? If you want to track options, and what you want to do is you go to trade, you go to GEO in the ticker. All right, and you look down your option chain. You want to make sure you can see. I like to put all so I can see all my options. All right, so we're looking at the $9 calls. We go to the strike, calls on the left side. So we'll right click. We'll come down to copy. Click it, go back to charts. Now we have, if you have this specific layout, I know some people do, then you want to come here in this chart, which is the chart you will use to track your option price. So you will control V after you copy it, control V, and you come here, you can change this 5 minute, 5 day. And now this chart tracks the price of the option. So as you can see, it had a low of, say, 15 cents, got to a high of 45 cents. So 13 cents, 45 cents. That's a nice move. And it kind of held its value up here at around 30 cents. So you got a 20-cent move. That's pretty good. It's pretty good. That's more than 100%. Oh, this was an awesome one. I put this one in the Discord this morning before the market opened. PLAB. This was a 10-cent. I think I got in for 15 cents. I got in for 15 cents. This was 150% profit. 150% profit. This one trade was phenomenal. After a trade like this, you could just shut the computer down. But we had the $20 calls for 10 cents or better. I got them for 15. Okay. So that option went at the open 15 cents. If you would have bought them at the open, to a high of 31 cents. All right. That's nice. It's a nice move. It's a nice move. That's all you need. You don't have to buy expensive options. So if you would have bought 10, I think I spent a little over $100. Actually, I think I got it for 11 cents. I did. I got it for 11. I spent about 100. Double my money real quick. First trade of the day. All right, so we just want to make sure we're taking good trades. We want to make sure that we're not overextending our finances on any one trade, and just keeping as much of the profit in-house as possible. You don't want to win 10 trades just to give everything back on trade 11. So keep your trade sizes consistent. If you're trading $100, stay within that threshold. Don't change it, because you trade $100 now, you win that trade. Next trade you put on 400, you lose, and you lose the 400 plus the 100 you made. So just stay consistent. That's where the discipline comes in. Stay consistent. Don't try to overextend yourself. Stay consistent. Stay profitable. So if you start with $100 trade, your next trade should be 100. Rule of thumb: you should never even be using more than 1 to 3% of your entire portfolio on any one trade. So depending on the size of your account, if you got $1,000 account, make small trades. That's why I put out so many cheap options. That's why I like cheap options, because they help people with small accounts as well. They don't have to necessarily be spending $1,100 on an SPX contract if their account doesn't really warrant them the luxury of actually buying and affording that contract. So if you're sitting on a smaller account, $1,000, then you definitely need to be utilizing um, calls that cost $26, $29, and work with turning that 29 into 100. That's when you can step up to, if you could turn $20 into 100 a couple times, then you can think about actually increasing your limits. Focus on starting small, because you want to learn how to trade first. You got to learn how to trade first because if you can't do it with $20, you can't turn $20 into 100 a couple times. There's no way you're gonna be able to do it with 100. There's no way you're gonna be able to do it with 500. There's just no way. And that's just gonna really determine your skill level. If you can do $20, $30, turn that into, $50 into a couple hundred, then you can think about turning 500 into a couple thousand. So let that be your challenge. Do that, because it's possible. You could take $16 and turn it into $100 in a day. So if you could do that a couple times, you take a week and say, you know what, I'm gonna try to turn $20 into $100, and just focus on that. I promise you, your skill set will get a whole lot better. But any questions? All right, nice to see you, Cam. Glad you came out, man, and joined us today. Good to see you, Sadiq. I'm glad you came out. Any questions that you guys have, throw them in the chat. If you got the microphone, if you want access to the microphone, let me know. I know Trials don't necessarily have microphone access right now, but I would love to answer any questions that you do have at this time. So just let me know. All right, no questions, no questions, no questions. All right, no questions. Can you go over PLAB? Yes, sir, I can. All right, let's go over PLAB. So if you're in the Discord, if not, I'm gonna drop a link to it in the chat real quick. We'll get you in there. So this was a free trade. I put out in the Discord before the market opened. So I put this trade out before the market opened for our non-students and non-members. But what happened with this trade was we had it was calling for PLAB $20 calls. So we had $20 strike price. So when we go to if we go to the option chain, this is where you go to purchase your options. Calls will be on your left and puts will be on your right. So this particular alert was for PLAB $20 strike. So we'll look here. This is where we find a strike. And I think the limit was 10 cents or better. So it would have cost you $10 to get in. I bought 10 contracts. which 10 times 10 cents, $10 is $100. I got in for 11, so it was I paid $111. By the time I sold it at 88 bucks. So almost doubled my money on one trade. So as soon as the market opened, what I did was I came here, I bought 10. So I'm looking at the chart. If you notice, it's kind of it's not as it's kind of gappy, and that's if I'm not getting an alert, I'm not really trying to trade a stock like this. It's not really a lot of volume in there. There's gaps all in between the uh, candlestick. So it was more like an insider play because nobody's really looking at PLAB. Nobody's heard of this. So it's highly liquid, but it's one of those things where if somebody knows something, then, you got a good tip. Or, we always tracking smart money and we're watching where the money is flowing. So when we see alerts, especially before the market comes open, somebody's done some research and we want to take that into consideration. So this particular trade called for the $20 strike at 10 cents, which is super cheap. Cost you $10 to get in. I bet $100. And never put a trade on if you're not really comfortable with losing it. If you're not comfortable letting that trade go to zero, don't put it on. So if you're not comfortable losing $1,000 on one trade, don't put $1,000 trade on. If you're not comfortable losing $100, don't put $100 trade on. It makes sense. So that way you're always keeping your account in mind, because things could go south super fast. And the thing about options is you need to be right, and you need to be right now, because you have theta, you have different variables. That's why any alert that I put out has been professionally, dissected, and I trust in it, even if it is a loser. I know that, it's pretty much going to have some good enough dimensions for me to either get out quick or what have you. But, I trust in the trade alerts that I get. But this particular one was a cheap option. It went from 10 cents to 30 cents. So that's almost more than 100% profit. If a 10 cents option goes to 20 cents, that's 100% on your money. So all you needed was a small move, somebody else to hit the bid, and you were able to double your money that fast. So to me, that was a no-brainer offer because it was so cheap. I didn't want to overextend my finances, so I put $100 on it. Started the day with a quick 88 bucks. And if you're just, if you don't have a lot of time, which I know a lot of people don't, it's hard to find yourself staring at charts all day. I know it. Nobody wants to be in front of a computer all day. I know I don't. So it's a good way to increase your income. If you can make an extra $1,000 a month, extra $2,000 a month, no hard work, trading an hour of the day, then that's what you should do. You should build up your finances. Get to a position, learn the skill set to. I don't necessarily believe in one source of income anyway. So, these are one of those things that kind of like a college course. It's going to take some years to actually learn how to replace your income. But as you're going through the process, you can increase what you do have going on. So if you're making $3,500, $4,500 a month, extra $1,000, $2,000 a month over a 21-day period is pretty good. If you can make $100 a day, $200 a day, that adds up at the end of the month. So, I really want people that's just starting to learn, just to kind of focus on winning more trades, just increasing your income right now. You don't have to necessarily go straight into full-time trading. I know that, we want to get that money. If we have lost money in the market, we want to get that back. But like I said, the psychological aspect, got to let that go. We got to start fresh. We got to really understand what it is that we weren't doing before, and how we can get to the next level by actually learning the skill set and what's required. So, you can sit back, take one or two good trades a day, make a couple $100, shut the computer off. You don't have to sit there and give any money back to the market. You don't have to give anything back. And, you can't overtrade and you can't undertrade. So there's 20 common mistakes that, based on a case study, that we all make as traders. So we got to identify what those mistakes are, stop doing them, and get past that point. So yeah, just focus on winning more trades. You can focus on winning more trades. Inevitably, you'll get better, and you'll keep your finances in order. What else you got? Any other questions? Hopefully that answers your questions. Hopefully that's making sense for you. Anything you want me to clarify about PLAB, let me know. All right. Cool. So, yeah, I'm glad you guys joined tonight. I appreciate the effort. I appreciate the scholarly enthusiasm. You guys were here. Could have been anywhere in the world. You came to get smart, man. I appreciate that, man. So I'm gonna definitely upload this video to, I guess, YouTube. I'll post it in the Discord. Yeah, so you're very welcome, man. Very welcome. Hopefully this helps you guys. Any questions, man, email me, support@privateprofitstrading.com. Hit me in the Discord. And I want to wish y'all a good night, man. Good night.